Hello and welcome to another webinar put on by IBFX. My name is Brian Kahn and we're going to do a quarter 2 review and quarter 3 preview. You have my email there. You have the IBFX Daily Forex Trading Edge.com site where I post daily market commentary. I posted I think 3 already this week. So lots of good material that led up to the webinar tonight. And then you have my website there and a little more information on my consulting company. As always, please ask questions through the questions function. You'll have to type them in, but they're welcome at any time throughout the broadcast. Let's go ahead and do the disclaimer first. I'll leave this up here for just a moment. And the next disclaimer, as always, volatile markets disclaimer. In volatile or fast-moving market conditions, stop and conditional orders become market orders to be filled at the prevailing price, which may be vastly different from the desired price. Stop loss or conditional orders do not always guarantee a fill, and such orders may not be filled as placed, and substantial losses may still occur. And aside from this, also this is for educational purposes only, with no buy, hold, or sell recommendations at any point during this broadcast. So an outline of where we're going tonight. Fundamental analysis, the macro and micro events, and we'll be doing that throughout the broadcast, obviously, as those are taking a front seat to a lot of the action across different Forex pairs. Technical analysis, some highlights I think that you should be aware of when going ahead and reviewing your technical analysis and doing your chart work. And we'll look and see if there's any intermarket relationships out there. And then we'll get into, again, throughout the broadcast, we'll be talking about fundamentals, but we'll go to quarter 2 review. Is this the end of the equity bull, international central bank government events, technicals, and then a preview of what may be coming fundamentally and technically for quarter 3. And then, as always, I'll wrap up with some links to various resources. So fundamental analysis, the importance of there, you can see it's in italics. I stress it because fundamentals are being driven by the central bankers out there, which we'll talk about, but really you've got to know what is going on as far as the economic calendar and fundamental data, and I'll show that to you in just a moment. Those current events and what they mean for traders and investors, you've got to be aware of what those current events are, when they're coming out, and what's being said. Your broker does a great job of providing that information. They have a link to a site I'm going to show you in just a moment, but also they provide you with daily market commentary from that Daily Forex Trading Edge site, and also obviously through webinars like this. So Forex Factory is that site that I was talking about. We're going to go there in just a second, but there is a link from the IBFX site to there, and I have it already pulled up. You have TV stations such as CNBC and Bloomberg, and you have other market sites. So that's how to stay on top of fundamental analysis. So we're going to leave the PowerPoint here for just a moment. We're going to jump over to the internet, and I'm going to bring up a couple of these different sites. So ForexFactory.com, they do a very good job of giving us the economic calendar. Again, I break this down now into macro and micro events, all right? Macro and micro events. Macro meaning when central banks are talking about their interest rates, geopolitical events such as, obviously, the government being overthrown in Egypt and what that did to oil prices. So there can be big effects on the markets from geopolitical events, and that's that whole volatile markets disclaimer. There's no guarantee where you're going to get filled. So obviously, you have ECB President Draghi speaking. That's a macro event. A micro event would be the consumer credit down here in the United States, a specific number that pertains to one currency. That's micro, but when someone's talking about their interest rates and setting them, that's a macro event, or the president is speaking, or whatever it may be as far as the big top-down, on a larger level, talking about something going on around that region. So geopolitical events and central bank, heads of central banks are definitely the macro events. Bloomberg, there's great headlines here, as you can see, and you can go into the various ones and read them, but again, it's always good to scan and see what's going on, what's driving interest rates, things like that. So after Draghi speaks, he's speaking, where can you catch up? You can do the work here. You can read my market commentary because I comment on it, and other people's that are providing their commentary on dailyforextradingedge.com. But Bloomberg is a great way to stay on top of it. Here's that Daily Forex Trading Edge page that IBFX provides out there and all the different commentary basically around the clock. And then again, as I showed you before, my website, Jupiter Peak Financial, and the different commentary I put on there. All right, let's jump back into the slides for just a moment here. All right, so that's your fundamental analysis. Technical analysis, just very, very quickly, because we'll get into this. I want to know where the trend is. Is it going up or down? Are there more buyers or more sellers? Support, where are the buyers coming out? Resistance, where are the sellers coming out? And then intermarket relationships. Is one market helping me trade my Forex market? Are equities leading Forex? Would oil prices be leading the Canadian dollar? Would gold prices be leading the Australian dollar? So different things like that. I'm always trying to pay attention to all of the financial markets and see if I can gain any edges. So that's what I'm asking you there. What are you finding that's giving you a trading edge? That's technical analysis. Looking to the charts to say, based on this, I think that this is going to happen. I'll put an entry here, I'll put a stop here, I'll put a target here, and I'll manage it the best I can from beginning to the end of the trade. So quarter two review, equities. What have they done over quarter two? They've done pretty well. We can bring those up and look at that, but I don't think we need to because, again, we know that as of today in the S&P in the U.S., it's 1% basically from an all-time high. So they were setting all-time highs back in April and then early May. We know that Bernanke spoke, and there's your central banks and governments. They're still here because Bernanke said, hey, we might end this quantitative easing period or look to end depending on economic data. And then other Federal Reserve governors came out and said, whoa, not yet, and so the equity markets broke and then the equity markets rallied. Interest rates definitely are being affected as these central bankers are talking about their currencies. So central banks and governments, they're still there, meaning every single day you've got to be paying attention to when those news events are coming out, and if they're not on the docket and if you're not prepared for it because it was a surprise talk, that's that volatile markets disclaimer. They can move the markets a Forex pair hundreds and hundreds and hundreds of pips in one way. That may be good for you, that may be bad for you, but we don't want to leave it to chance, so that's why we trade with a proper risk management for every single trade, knowing that that can happen and the markets can become volatile at the snap of a finger. Technical picture, think about the equities. We know that the Asian markets had a bad time of it in May and early June, and they were off about 20%. The U.S. only went down about 5 or 6 or 7%, and then the U.S. came right back up. So right now, the U.S. seems to be the shining star as far as equity markets. Now we have to go and figure out, does that lead to a shining star in the Forex pairs, and what Forex pairs are strong, what Forex pairs are weak. Currency wars, again, every central bank out there is basically doing the same, trying to prop up equity markets, trying to provide financial stability, trying to provide employment growth that will lead to more earnings and more spending and a brighter economy. So with all of that, we did have an increase in average trading ranges over in quarter two, and starting in quarter three, we're seeing that as well. It was a small increase because there was a slight increase in volatility, and as you know, if the equity markets are rebounding because of what the Federal Reserve and different central banks are saying, Draghi saying we're still here and helping, volatility goes back down. So you just have to make sure that you're aware of what is realistic, and that's why it's so nice to look at the charts. What is realistic given the charts? If I'm a trader for the next 5 minutes because I'm a day trader, what trading range is realistic? If the trading range is 10 pips, I can't ask for 50. If I'm a long-term trader, I can't ask for 800 pips if the trading range has been 200 or 300 or 400 pips over 5, 6, 7, 8, 9, 10 days, all right? So you've got to use the charts to be realistic. So that's a quarter two review. Central banks, macro data. Micro data is still important, but taking a back seat, you still have to pay attention to it because the central bankers say that they're watching it. But I really believe that the macro data is still at the forefront, and you've got to be aware of geopolitical events. You've got to be aware of central bankers and when they're speaking, and that'll lead you to the technicals so that you can see what's realistic in those trading ranges. And we'll look at those in just a moment. So a preview of what's coming up in quarter three as far as my opinion. Again, these are my opinions. Macroeconomic fundamentals. What is next from central banks? I just can't imagine much will change, but that's why we sit in front of the markets every day. Hopefully something does come in as a surprise and it moves the markets. But I can't imagine that central banks will change from their accommodative stance anytime soon. Interest rates as far as the U.S. have gone up a little bit. I don't know how much more they're going to go up, but even if they go up a little bit more, I don't know if it's going to scare the financial markets, the equity markets, too bad. but obviously that could lead to strengthening the U.S. dollar against another currency, possibly. Global growth. Right now we're getting earnings. We get earnings from U.S. equities 4 times a year. This is an equity period, or an earnings period. So over the next few weeks, lots of companies were reporting how they're doing. What does global growth look like? Are people spending money? Are companies making money? Are they able to do more hiring, or do they have to lay off because their margins were tighter, their profits weren't as big? That's something to keep an eye on. Definitely is just the macro data. It's micro data, but just be able to go to Bloomberg, be able to go to CNBC, be able to go to your daily forextradingedge.com and see how that's playing and affecting equity markets and affecting interest rates, obviously. So how is global growth going to do over the next 3 months or so? Intermarket relationships, are there any going on? Can you use them to build trading plans? And then obviously the technical review. And a technical preview, this is a great chance for you to say, hey, look at this pair. What do you think of this, analysis on this pair as I start to run through them, okay? So let's leave the PowerPoint again, and we'll go into the charts and take a look and kind of walk through what I saw in Q2, what I think I'm going to see in Q3, and how that may go ahead and play out for different possible moves in Forex pairs. So up here I have the IBFX MetaTrader 4 platform. And again, as I talked about, when Bernanke spoke back in June, the equity markets broke because interest rates rose because he said we might see an end to this. All right, things have changed after that, but that's what happened in late May, early June. So let's go out and see if we can find that area here in the pound versus the U.S. dollar. All right. So it happened right here in mid-June, and you can see since mid-June we've had the U.S. dollar start to just rally and rally and rally, and the pound go from 1.57 down to basically a low today, 1.48. So 10 pennies, 1,000 pips. Interestingly enough, here's your technical analysis. Big move down, violated this support level, and then it came down to this support level. So if I put a little horizontal line right here, we do have some support, previous support, right in the area that we're at right now. All right, so are we going to get a little bit of a bounce there off of that support level, off of the U.S. dollar being strong? Again, think about it. U.S. interest rates are going up. Stock market is going up. So if the stock market starts to peter out and go back down because it might be at resistance, does that get people to start to come out of the stock market and go into bonds because they're safer? And bonds go up, interest rates go down. So maybe that gives a chance of the pound to rally a little bit at an old support level. So that's the big picture on the pound. You can go out to a weekly to see what's below. And this gives you a better view for a longer-term trader. They know this, maybe not a shorter-term trader. But look at what the pound has done 2010 and 11 and 12 and 13. It's basically been in about a 50 to 60 range, almost, about 10 pips. For 3 years or so, it's been in that 10-pip range. Is there a reason now for the pound to get weaker against the U.S. dollar and start to go into the 49, 48, 47, 46, 45 handle? We shall see. But very interesting to see that we are on kind of a major area here. All right. Euro versus the U.S. dollar. Euro, we know, look at the same thing. Same date, mid-June, and the euro just started getting crushed against the U.S. dollar. And again, look, I'm going to delete this Fibonacci here. And again, you tell me, where are we sitting right now in the euro versus the U.S. dollar? Are we sitting on resistance? Are we sitting on support? And you guys know the answer because you're savvy traders out there and you're doing your work. You've got to be very, very hesitant buying here because this thing could gap way down and start to move down to the downside as it breaks this major support level. So if you're a short-term trader, you've got to know these longer-term levels. If you're a longer-term trader, you've got to know, what you're doing down here. Why would you be a buyer? When would you be a seller and continue to add to this downward pressure? Very interesting level. Who knows what's going to happen, but it might be caused by a technical event. It might be caused because a central banker talks and says something. Maybe they come out in the U.S. and say, hey, data's great, we're going to raise rates. That might get, obviously, the U.S. to strengthen more, and the euro would drop again against the U.S. dollar. But pretty interesting levels when you look at it on these longer-term charts, and if you're not aware of it, you have to be. That's your, you have a daily routine of fundamental analysis that I can't stress enough, and you have a daily routine going through your technical analysis tools. All right. Going over to the Aussie and the U.S. dollar. Aussie is getting killed against the U.S. dollar as of late. Partially what's going on in the Australian side of things, and also obviously on the U.S. side of things. But major lows that we broke. I mean, this is a massive move that we did here. Starting up here, let me move this panel. So we went down to a low around 90 recently, and we started a high up there at 105. So 15 pennies in a very short period of time. So this is a big trend. You have to go out to a weekly chart to get any data, and you can see that's why I have these longer term moving averages in here. Is it going to hit a moving average? Will there be a Fibonacci retracement? Are there trend lines that you can put in? Why would you choose to buy or sell it short term or long term based on your analysis? Obviously, if you're a buyer in this down move, things probably aren't working out unless you're perfectly timing it and taking probably pretty quick trades, because it moves up very little and then moves down. Moves up very little bit and then moves down. So the trend of the Aussie is down against the U.S. dollar. There doesn't seem to be any support or insight and resistance. We don't really have to worry about that for a while. But again, it was in a very tight range, and then something fundamentally started to cause it to go. And technically, you could see the selling pressure every single day in the Aussie dollar versus the U.S. dollar. Same thing in the New Zealand dollar. On a daily chart, New Zealand has gotten pretty weak. Again, think about that date back in mid-June. What happened? Here it is. It really started to move to the downside as the U.S. dollar strengthened due to the interest rates, due to a fundamental event where Bernanke talked. So again, I don't think that anything is going to change going forward. Central bankers are going to talk, and they have the possibility at some point, not every time they talk, but at various times, they will drive interest rates. They will drive currency pairs. So you've got to be aware of that. But there are technical, patterns to be aware of as well. Lots and lots of support you can see on this 4-hour chart in the New Zealand dollar, where there has been some buying opportunity and selling opportunity. We're at the top of the range right now. So again, you've got to use fundamentals, and then you've got to move the technicals to help you as far as where and why you're going to do something, create that trading plan. U.S. dollar strengthened against the Canadian dollar. So here we have the U.S. dollar as the front of the currency pair. And again, there you are in mid-June, and it spikes up and goes higher. And the U.S. dollar is doing very well. Nice long trend, as you can see, against the Canadian dollar. So we'll see. I don't really know if interest rates in the U.S. are going to go that much higher. So now that we have this big move up, is there a place that you can start to buy the pound, start to buy the euro, start to buy the Aussie dollar? That's something that we'll have to watch. Again, it's very hard to buy things when you're sitting on the edge of a cliff like we are in the pound and the euro as we look at those charts. But obviously, tomorrow could be another day, and we could trend up in the pound or trend up in the pound or in the euro against the U.S. dollar. So every day is a new day, and it's fun. And if you're a day trader, you're only looking for a few pips anyways. If you're a longer-term swing or intermediate or position trader, you're looking for 50, 100, 150 pips, 200 pips, and it can do that in a heartbeat. Talking about large trading ranges, the U.S. dollar and the Swissy had a huge trading range today. The low price down here, let's see how big the trading range was as I move this panel again. So we had a low in this 24-hour period of 96.35 and a high of 97.50. So 120 pips. That's a standard deviation trade that I like, called the Buffalo Bounce, that I described in today's market commentary, that you can see on my site or see on the dailyforextradingedge.com website. But good standard deviation trades today, as the U.S. Swissy had a much bigger than average trading range than it usually does if you look at its daily trading range. So lots of excitement, I think, to happen. I think volatility will continue to bounce around, and I think that it will be the cause of people traders and investors trying to figure out where to park their money and their assets due to central bankers talking and where the best yield is. We're always talking about search for yield, and right now the equity markets seem to be the best search for yield, although interest rates came up a little bit in the U.S., so a little bit better yield there. People who are living off of bond income and things like that are a little bit happier as interest rates came up. But again, that could change as we get economic data and as central bankers tend to change their mind and change their forecasts and things like that. So walking back into the slides here. So the quarter 3 preview, remember, Pay attention to central bankers. See what's going on with global growth, because if global growth doesn't hang in there and it weakens, we may see more stimulative packages from central bankers. And again, using all of that data as far as equity markets and commodity prices, and then linking that into your Forex pairs and your analysis there. Technical preview. Didn't seem to have any questions from attendees tonight. I ran through about 6 different pairs, so hopefully that was enough for you to see some support and some resistance and some trending in the various pairs against the US dollar. So a quick review: fundamental events, fundamental events, fundamental events. Split up your macro and micro events and pay attention to them. And then technical analysis, that's your trading plan. Going forward, you've always got to use the charts to create the correct amount of risk and reward that you're prepared to take for each trade. And then this leads to the resources. Next webinar will be in about 2 weeks. I'll do a fundamental analysis update, technical analysis, and the main topic, I think we're going to be talking about a currency pair. I think the euro linked with another pair. So if you're interested in my thoughts on the euro in a couple weeks, please check in. And obviously you can stay involved with my commentary every day, reaching out to me via email, but the dailyforextradingedge.com page, and obviously my website down there at the bottom. And then all previous videos that I have, probably 3 dozen or so, on youtube.com, and then look for the IBFX videos there. So as I always end, happy trading, invest intelligently, and I look forward to seeing you here for another IBFX webinar in a few weeks. Thank you very much.